Hey traders, checking into the stock market today. Absolute complete bear control out there with a significant shift underway back from the slow bear frustration grind up to bears finally getting their wins the last couple of days. Are we due for a short-term bounce? I'll tell you what I think. So since we last checked in, we had a significant shift. The daily consolidation started on Tuesday and Wednesday and was very healthy. And on Thursday, we saw the first day in weeks where both the financial sector and QQQ were both dropping together and at the lows together. And before that, XLF was a lead bull, just stair step higher low every single day. And so that was helping keep things really strong. But a very fast shift where we are now in weekly consolidation. We are seeing bears gaining their confidence after the period of frustration. And we essentially went from fear on the drop to FOMO once that bounce really got going. And now there's definitely a touch of fear back in the air as we are giving back this move fairly quickly. So we did fill a gap at 412.75, which was a short-term target for some bears to keep an eye on. And technically speaking, we're still in a daily uptrend, but obviously the size of the pullback is concerning for the bulls in the short term. Anything above 410.22 is a higher low. And we would need to see an hourly trend change back to the bulls for a daily higher low to be set. But due to the size of the pullback that we've seen over the past couple of days, we will be scouting daily lower highs to be the result of the next bounce. The S&P 500 here could bounce 3-4% and still just be looking for that daily lower high. So here's the weekly consolidation underway. And as far as the retracement off of our lows, it's still insignificant at this point. And generally speaking, I would say bulls want to keep retracement size less than 50%, and bears want to see the retracement size more than 50%. Could this be a bull flag? Absolutely, it's a possibility. But after today's action, I'm certainly not holding my breath for it to be a bull flag. We would need to see a hard, fast turnaround from today's action. And today is where we were seeing all of our major sectors hitting low of the day at the same time. And that's something that we did not see for weeks and weeks on the bounce. And we certainly knew to be paying attention for that to be a signal. Market conditions are shifting, weekly consolidation underway. So on this next bounce that we look for, anything under the high of today is an hourly lower high. And we are extremely beat up on both the S&P 500 futures 4-hour chart. You can see the hourly RSI was oversold all day today. And the 4-hour RSI got down to 20, and we scroll back, and the RSI levels that we're seeing right now on the futures chart, only 3 times they've been this beat up, which was our fear bottom a couple months ago, and the CVID dump, and now. And it's very unusual, in my opinion, for this to be happening right off the top. The other times it happened after significant weakness. That makes sense, at a bottom, finding a temporary bottom with extremes. But to get to these extremes from the top is definitely a bit unusual. And so for me, what today showed me was just a lack of any significant dip buying whatsoever. And if we were going to be a weekly bull flag, we would be seeing significant, confident dip buying. So bears loving today's action. We're going to be looking for 4-hour lower highs to be the result of the next bounce. Cool off RSI a little bit. Tons of space for that lower high. And we'll be watching our retracement sizes. And I'm going to be sticking to the futures charts a bit more than the ETFs here, just because of the extra data and clarity. And for me, I'm going to be using that retracement. And there's a whole bunch of space for it to remain a possible bear flag. NASDAQ is even more beat up. We lost the daily support level, so we are not in a daily uptrend. QQQ bear break of 315.42. Second gap down open in a row. Again, hourly RSI, meaningless. Didn't do a thing today for bulls. So bulls that looked to buy the morning dip definitely were punished. I looked to buy the late morning dip. We had a bit of a falling wedge forming, and I was noticing the bear breaks lacking follow through on QQQ. So I grabbed a couple of bull positions here and then recognized the red flags to bail. And the red flags were the inability to break price levels. 316.70 was resistance. We topped out at 316.55. We topped out at 316.48. We topped out at 316.37. Just a standard lower high downtrend rejecting from 15-minute EMA 12 resistance a bunch. And so I was in that bounce saying, I'm looking for an hourly bounce, selling partial when I recognize the red flags, stopping out of the rest, pretty much break even at those lows, and didn't grab as sizable of a bearish position. I did flip back to bear again, recognizing a 15-minute bear flag, but not aggressively enough. I was surprised by how much further follow through the bears were able to get from there. But at this point, personally need to see the 4-hour RSI levels cool off if I'm going to be comfortable looking bearish again for anything more than just a quick little flip. But again, we're going to be watching for daily lower highs to be the result of the next bounce. And for QQQ, I would call anything under the high of today an hourly lower high. We can see the hourly bounce is shaping up a bit here in after hours, but look at how fast that RSI is cooling off. We were down at 22. Nope, we were down at 13. Down at 13 to start the morning. Little bit of a bounce, cooled it off, and we are seeing the price lower and the RSI higher. A bit of divergence, but point is, we are quickly going to no longer be hourly oversold. That being said, the 4-hour down in the teens, and again, one of the top 3 most extremes that this 4-hour RSI has gotten on the NASDAQ futures chart in the last 3+ years. Tons of space for the 4-hour lower high. Bears are waiting for the 4-hour lower high from here. Patient bears are waiting for daily lower highs from here. Growth names have been dropping harder. We've got this 2-day hard drop on SPY and QQQ, but if you look at a bunch of growth names, they've been dropping for 5 days. ARKK, so a 5-day hard drop. So a lot of these growth names have a lot more space for daily lower highs to be the result of the next bounce. CRWD, PLTR already confirmed a bear flag. Look at how much space we've got for another lower high from here. Close at the low of the day 3 days in a row. The biotech sector has been weaker, not nearly as weak as some of those other names, but there is space for that daily lower high. We can bounce over 10%, close to 15%, and still just be looking for a lower high to be the result of that next bounce. So aggressive bulls are looking for oversold bounces. Now, patient bears are waiting for entries or re-entries. Just have to determine what time frame matters most to you and which names you are focusing on. But a lot of these growth names have higher probabilities of daily lower highs, in my opinion, just because of how much more space has been created with the 5-day drop as opposed to 3 days of sideways and then a 2-day drop in SPY and QQQ. Semiconductors, relative weakness. So the NASDAQ is relatively weaker than the S&P 500, and the semiconductors are relatively weaker than the NASDAQ. We've been pointing out many times how bulls and bears alike want QQQ to be leading. Look at QQQ leading the way to the downside here. Every single move that we've seen in this market, from the move to the all-time highs, to the big fear pullback, to the decent bounces on the way down during that fear pullback, to the most recent one, it's always QQQ. I'm on the wrong chart here. But it's always QQQ, not as significant, but clearly weakening when bears have control and gaining strength when bulls have control. So I use this almost as a little confirmation. Yep, okay, I believe the price. Because if we see broader market strength from here next bounce and QQQ is still lagging behind SPY, I'm not going to be trusting that bounce because QQQ is not leading. You want to see QQQ leading in whatever direction the move is happening to believe it. And it's certainly leading to the downside the last few days. Semiconductors testing the low 226.73, and that did break. Again, weekly consolidation underway. Use those retracements for whatever you're watching on the weekly. Could this be an inverse head and shoulders on semiconductors? Yes, it's still possible. If we retrace over 50%, that possibility becomes a lot less likely. So we need a weekly high or low, anything above our fear lows, and we're watching retracement sizes over the next couple of weeks. And bears want to confirm downtrend. So SPY and QQQ have lost the uptrend. Well, QQQ lost the uptrend. If this weekly consolidation is going to be prolonged and play out over weeks, we have to confirm downtrends as the results of bounces from here. Tesla held up fairly well today, all things considered. Still a red day, but you look at his daily chart and you wouldn't know that the broader market dumped hard today. So I'm viewing Tesla with the split incoming, but I got the high, low, double top, and anything above 838 is a daily high or low. So watching for the potential of a tightening 2-day range. And there's some names out there that have started to shape up hourly trend changes, and they're obviously well in advance of the broader market, as SPY and QQQ hit new lows into the late afternoon. Tesla didn't come close to a new low. Well, I guess it came within 1%. That's fairly close for Tesla, but just a much more notable difference in how the second half of the day played out. So if bulls can confirm the hourly uptrend tomorrow, we're watching for the potential of a tightening daily range. But the burden is on bulls to prove a higher low compared to 838 from here. Financial sector, double inside bar, and then just fell through support. Look at the high bear volume. So we were grinding up higher low every single day, and we took out this triple bottom all on one 5-minute candle to start Thursday, and very significant follow through today. Weekly consolidation underway. Retracement still healthy, but over the next couple of weeks, we'll see how significant retracement gets. And again, all sectors dropping together today. So we are seeing money leaving the market, not just rotation. Healthcare tried to hold on Thursday, and it did. It held on real well. And so we could say, oh, there's some potential rotation there. But today, catching back up with the bears a bit, and looking at 130.37 is the next support level. Weekly consolidation underway here as well. And the last couple of days, I've been stopping out of a good bit of long exposure. I stopped out of an XLV swing position from last week, and I stopped out of NEM, that bottom fish for that oversold bounce on the weekly time frame, which we failed, and still seeing a lower high every single week forever on NEM, as gold and the miners are weak. We'll look at those in just a moment. So it's almost like a burden off of me. Less positions. I just like less positions. Less things to keep an eye on. I much prefer cash and agility. But gotta practice. Gotta practice having positions for a while. Swing positions. Can't do the day trading thing forever. IWM. Also going from a lead bull and fading notably. But again, still a daily uptrend for me. Anything above 189.16, that was our last daily high or low. This is all the same pullback here. But we are creating space for a potential daily lower high to be the result of the next bounce. Weekly consolidation underway, watching retracement size. And again, bears have a lot of proving on the weekly to do. Certainly they proved the short term the last 2 days, but bears have to keep this control now for multiple weeks. 3, 4, I mean, if we're talking fresh lows, like many bears are, you got to keep control for a long time from here. Already went over the biotech sector, scouting a daily lower high to be the result of the next bounce. Energy is on watch. Energy bulls are keeping the higher lows going. The monthly EMA 12 held as support. A monthly higher low has been established. And again, watch the inverse relationship between energy and growth. Energy topped near when growth bottomed. Energy pulled back for 2 months. Growth bounced for 2 to 3 months. Energy now setting a higher low. Is growth now setting monthly lower highs? XBI, maybe. Upper wick, EMA resistance. PLTR, yep, it's set. ARKK, maybe. Certainly looks like a bear flag. Weak monthly bounce, bigger picture. So just keeping an eye on that inverse relationship. But with that energy bull move, keeping an eye on some individual names, CVX, getting nice and tight. And we're watching this oil falling wedge now on CLV, October futures contract. This is a beautiful falling wedge we've been tracking for a while. Weakness this morning, significantly bought up. Can the bulls break 91.69 resistance to confirm the daily trend change? And if so, this tightening sideways range would likely break bull. So CVX trying to set that daily higher low today. And keeping an eye on energy names as they are holding up well comparatively during this current pullback. And watching oil closely this week. The VIX got the bull move. So daily EMA 12, daily lower highs, consistent forever. Daily lower highs broke on Friday. Still an upper wick, but a lot more convincing follow through today. Weekly stair step of a lower high every single week has now broken. And we're going to be keeping an eye out for a weekly lower high, just like I'm keeping an eye out for a weekly higher low in the major indices. Dollar strength, weekly EMA 12 support held. The stock market bulls were able to fend off caring about the dollar bounce as it was starting, but this most recent leg up certainly looks like it's having an impact. Still just keeping the same pattern of the weekly uptrend and weekly EMA 12, and we're testing the 109.29 high here. And we would have to see a loss of weekly EMA 12 if anything is going to change. If you are a gold and silver bull, it is very hard to be bullish if the dollar has weekly EMA 12 as support. So gold started the pullback first. And again, just the order of events. Metals started weekly consolidation first. Crypto second. Stocks third. So gold, 4 hour, just a clear downtrend. EMA 12 resistance for over a week as the dollar has been riding EMA 12 support on the 4 hour for a week. Tons of space for the daily lower high to be the result of the next bounce. Only question we have over the next couple of weeks is, can the bulls form a weekly higher low? We've already retraced 50% plus. If I'm a stock market bear, I'm hoping my chart looks just like this as far as the amount of the pullback. Silver, same deal. Weekly, giving back the majority of the move. Can we hold 1814, or does the weekly downtrend, which has been intact for the last 5 months, does it just continue? The dollar is likely going to dictate the answer to that question. Miners extremely weak, trying to fend off the weekly bear flag. The bounce was even weaker than the metals. So holding support at the moment, but we would need a daily trend change back to the miner bulls if we're going to see a weekly higher low form. CCJ uranium play, keeping an eye on this weekly. It's continuing to tighten up. After fumbling my bear play, it would have played out nicely. Now we're watching for a higher low compared to 2034. Ideally, this continues to tighten up for another month. And then we look for a break in September. And this has been building for a year. No, all year. Not a year. All year. So 7-8 months. So when it breaks, we can anticipate there's going to likely be some solid follow-through. The tighter, the better. This is one to just keep an eye on it over the next month. Natural gas bulls following through. Another daily bull flag confirming. $10 psychological resistance. 892 is our new benchmark support level. And this is another reason the energy sector is strong. Natural gas is at many year highs and keeping that strength going. Natural gas, highest levels in 14 years. Oil bulls hoping, look at the size of this pullback on natural gas that resulted in a higher high. Oil bulls really hoping to see that kind of monthly uptrend continuation. Although I personally will be looking for a monthly tightening range to be more likely than not. But first, we got to set the monthly higher low and get a bounce going. Congrats to the bears. Took a long time to play out, but finally rolling over. Not surprising that once the scales tilt like that the downside is more aggressive than the upside. That's often what we see. Stairs up, elevator down. Biggest factors for me from here. What's the weekly retracement size? Well, first things first, can bears confirm daily lower highs and lower lows to be the result of the next bounce? And then how much retracement size do we see on the weekly time frame while bears keep control of that daily downtrend? Appreciate you watching. Hope you had a great weekend and do some good things out there. This is the first batch of honey. This was half of it from the hive in the back, 12 pounds, which is about 100 times more than I need. Got to dish that out to friends. That is one of the more unique caterpillars I've seen in a very long time. It's a very small body, but it's got these two protruding things of whiskers and then a bunch of these back little pouches of fur. If anybody knows what that is, big bonus points. This raspberry bush is still producing. I did it early spring and then another wave in the fall here, or late summer. Figs, only a couple get ripe at a time, but there's a whole bunch of non-ripe ones. This one's probably got 100 plus. So all the non-ripe ones are these little things that hopefully will size up before the fall, but every now and again there's a fresh, ready one. I gotta jump to get that one. Perfectly ripe.